Good morning and welcome to the day ahead. It is Friday, April 1st. I'm Andrew Gagan. Well, it's the end of the month and end of the quarter for equities, with both the US and Europe posting the worst quarter since the beginning of the pandemic, with the overnight session not any different. In the quarter, the S&P falling some 5%, its steepest decline in 2 years. The Dow dropping 4.6% and the Nasdaq shedding just over 9%, its sharpest quarterly dip since the first quarter of 2020. Stocks slid as investors sold off risky assets amid concerns over a possible US recession and the ongoing war in Ukraine. This as oil plunged more than $8 a barrel after Washington's promise to release 180 million barrels of oil from its strategic reserves to tackle soaring prices at the petrol pump. The release is the biggest since stockpiling began in 1974 and is part of President Joe Biden's two-pronged approach to quell surging energy prices.
Right now, oil and gas industry is sitting on nearly 9,000 unused but approved permits for production on federal lands, or more than 1 million unused acres they have a right to pump on. To help execute this first part of my plan, I'm calling for a use it or lose it policy. Congress should make companies pay fees on wells on federal leases they haven't used in years, and acres of public land they're hoarding without production. That's why the next part of my plan is so important. Today, I'm authorizing the release of 1 million barrels per day for the next 6 months.
Russian President Vladimir Putin, meantime, has threatened to stop contracts supplying Europe with a third of its gas unless they're paid in rubles. The Kremlin says it will aim to make those payments as convenient as possible, saying it has the right technology and experience to quickly and expertly fulfill a state order to switch to rubles for gas payments, which President Putin signed earlier in the day. Well, elsewhere on equities, quarter-end portfolio rebalancing boosted demand for bonds and held down yields, though concerns of a recession still remain after 2- and 10-year inversion earlier in the week. Stock specific, Tesla looking to be the only megacap winner of the first quarter, gaining some 3% in the period, though is still down 11% from its peak in late 2021. The other big tech plays were the big losers though. Microsoft, 7% down in the quarter, Google down nearly 3%, Nvidia 6% loss there, with Meta, the yellow line on your screen there, dropping a staggering 33% in the period. Well, as the crisis in Ukraine continues, the impact to global economy also ramps up. In response, S&P Global has taken the scissors to its global GDP forecasts, snipping it by 60 basis points to 3.6% this year, followed by a 20 basis point fall for 2023. Unsurprisingly, the Eurozone is expected to take the biggest hit to growth. However, some silver lining there, with S&P saying since the Russia-Ukraine conflict remains geographically contained, the economic impact is expected to peak in the second quarter, with a caveat: China stays out of it and doesn't provide direct support to the Kremlin. In the States, all eyes are on the PCE deflator, the headline measure rising from 6 to 6.4%, and the key core PCE measure rising from 5.2 to 5.4%, with a shade lower than expected. Jobless claims edging high to 202,000, defying expectations of a dip lower. And on the FX market, the euro was lower against the greenback as hopes of positive progress in peace talks between Russia and Ukraine were dashed again. The big dollar was a little changed against the yen, with gold lower, but is still set for its biggest quarterly gain since the second quarter of 2020. And the Australian unit, again, remaining resilient in the face of volatility, holding at that 75-cent level. Bitcoin investors keeping with the soft at-risk appetite, the coin down around 3%. The breakback below the $46,000 level, currently sitting there just at above 45,500. So how's this all set us up for today locally? Having dipped in late trade yesterday to end 7 days of solid gains, SPI futures pointing to losses this morning, off just over 0.5%. Even though the share market ended in the red yesterday, it had its best month in 16, up close to 6.4% for March. Now the market's two heavyweight sectors, financials and materials, both up 8% for the month. Materials benefiting from surging commodity prices off the back of the war in Ukraine and associated sanctions. As mentioned, global oil prices falling by as much as 7% overnight, with the US announcing it will release 1 million barrels a day from its strategic petroleum reserve over a 6-month period. And the OPEC Plus oil-producing nations sticking with their existing deal for May, raising the production target by 432,000 barrels a day. Elsewhere in commodities, nickel, aluminium and lead falling by as much as 2.5%, and the gold futures price rising by 0.8% to $1,954 an ounce. On the data docket today, it's all about housing, with March dwelling prices released this morning and February housing finance late this morning. On the corporate tape, ANZ beginning a joint venture with Worldline, which will see a 49% and 51% interest stake respectively, aimed at providing ANZ Australia's customers with access to point of sale and online payment technology. Elders selling its 30% equity stake in Stockco Holdings to New Zealand's Heartland Group, booking a non-underlying profit of the sale of between $15 and $20 million. And that is your day ahead. Enjoy it. We'll see you again Monday.